Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, May 17, 2021. My name is Alexander Turro, Senior Market Strategist here at RGO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index largely unchanged, up 0.1% last week, despite the spike in U.S. equity volatility as it continues to signal bearish on a 90-day trend duration. You take a look at the euro versus the U.S. dollar, that did correct, down minus 0.2% last week as it continues to signal bullish on a 90-day trend duration. If you take a look at the Canadian dollar, that appreciated 0.3% versus the U.S. dollar to now plus 3.5% just in the last month alone. And if you take a look at the British pound versus the US dollar, that continues appreciation, another 0.8% versus the US dollar to now plus 2.3% in the last month alone. Now, if you take a look at commodities, notwithstanding the energy complex and oil and natural gas, we did have commodities finally correct off their most recent cycle highs last week. So if you take a look at the CRB index, the blend of 19 commodities, that corrected minus 1.8% last week, but it's still up 5.6% just in the last month alone. If you take a look at WTI oil, that continues inflation, another 0.7% last week to now plus 11.6% in the last 3 months. Copper corrected minus 2% last week to now plus 23.1% in the last 3 months. Take a look at the agricultural sector in corn. That came off aggressively, down 12% last week, 12.1 to be exact, to now plus 22.6% in the last 3 months. Lumber, which has gone absolutely vertical, corrected 16.8% last week to now plus 80.5% last 3 months. And if you take a look at the meats in hogs, that corrected in kind 4% to now plus 18.4% in the last 3 months. Touching on the episodic and non-trending spike in U.S. equity volatility last week, you did have front month VIX up 18% on the week, but down 6% in the last 3 months, which again would be the trend. SPYs corrected minus 1.4% on the week to now plus 6.3% in the last 3 months. What's interesting to note here is the implied volatility premiums that had developed just last week. If you take a look on Wednesday, the implied volatility versus the 30-day realized on the SPY had ballooned to plus 72%, which is now back down to about plus 14, with the medium-term downside in the VIX to about 14 or 15, which would be new cycle highs and would coincidentally allude to perhaps all-time highs in the broader equity market. Touching on the European market and their sovereign yields, take a look at Germany's DAX, and the market continues to move higher. Largely unchanged last week, 0.1%, but up 9.7% just in the last 3 months. Italy up 0.6% last week to now plus 5.8% in the last 3 months. Spain up another 0.2 to now plus 6.4 in the last month. And even something like Poland was up 6% just in the last month. And if you take a look at their sovereign yields, they continue to move higher as well. You take a look at France, Italy, and Portugal, all up over 30 basis points just in the last month. And whereas you got Germany, Spain, and the Netherlands all up around 20 basis points just in the last month as well. Noting on the CPI and PPI inflationary readings from last week, really doesn't come to all that much of a surprise. If you take a look at commodities, which often do front run the headline numbers in CPI. So if you do take a look at commodities just over the course of the last year, you take a look at lumber, that's up 333%, oil up 158%, and then copper up 101% just over the course of the last year. So with that, that's all we have for you today. If you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.